All right, Monjit Gogoi, Regional Director, Alpari Financial Services, joins us to talk more on the rupee fall. Hello, Mr. Gogoi. Welcome to the show.
Hello, very good afternoon.
First thing I would want to ask you, why is the rupee moving the way it is moving right now?
Well, there are a couple of factors why rupee is behaving at this point of time. Primarily, one is basically of the revival of the U.S. economy, which we have seen over the last couple of days. We have seen some positive numbers coming in from U.S. economy, which is strengthening the dollar against the other few currencies, which is the major currencies across the world. We have also seen an increased demand of dollar by the local importers, primarily by the oil importers and other importers in India, which is actually pushing rupee towards the 58 levels currently.
So now you must have read that the Finance Ministry has said that the panic in the market about rupee is unwarranted. How much do you agree to this?
It is absolutely correct, because the fundamentals, if you look at the economic fundamentals, rupee is definitely going to behave and move towards the 60 levels. It is predominantly inherited, and the purchasing power parity that describes Indian rupee is above 60 levels. So yes, it should find comfort around 60 levels, and panic is definitely unwarranted at this point of time in the market. And I totally agree with the statements of the Finance Ministry.
So you're mentioning 60, so you see that rupee moving to level of 60 in future?
Absolutely, yes. Currently what our technical says is a technical immediate resistance is 58 levels, which I definitely think is going to breach very soon. The immediate upside above 58 levels is 58.8. So we can see rupee trading at 58.8 levels in couple of two trading sessions, and maybe in a week's time, if we do not see fundamental corrections happening, the rupee might be trading around 60 levels. Yes, one positive movement that rupee might see in the near term is basically the high inflows that's going to come in because of the Unilever sale, stake sale, as well as the Bharti retail. So we might see some small short-term corrections, but definitely rupee is planning to hover around 60 levels in the coming few days.
So when you mention 60, don't you see the market and other parts panicking about this?
Not really, because this is what the fundamentals is about Indian rupees. What rupee is going to behave in that levels around 60, because fundamentally if you look, the CAD is increasing day by day. We are not seeing the import bills getting decreased. We are not seeing any positive numbers coming in from the Indian economy. So without the support of all this fundamentals, which is going to give some cushion to rupee is going to move upwards. And moreover, dollar is getting strengthened in the overseas market, which is again a surprising factor for a lot of us. And if the dollar is going to get stronger, rupee is definitely going to behave in a negative way.
So do you see RBI's intervention in this?
As RBI governor has clearly said that he is going to intervene only to curb volatility and not to depreciate rupee, because that's not the correct weapon to use at this point of time. Because it might give a wrong impression to the FIIs and the money people that and the other institutions which is bringing money into the Indian economy.
So what, according to you, the steps could be taken by the government to correct this entire thing?
Well, the correct way to correct the entire thing is basically to boost exports, because if you have a high trade deficit, there is no way you can devalue the rupee or bring down the currency. We'll have to look at steps taken by the government to boost imports, to cut down boost exports, and cut down imports, and that is the only way we can look at rupee getting stronger in coming few months. But otherwise, unless and until we can boost exports and cut down imports, we do not see any fundamental reason for rupee to come down strongly. We might see some short-term corrections on terms of profit selling and profit booking, but fundamentally it is looking at moving towards 60. And unless and until government takes some bold steps to correct these things, we do not see rupee moving below that levels.
So when you mention short-time correction and when you say 60 level, so is the rupee bound to touch 60, come back, touch 60, come back?
Our immediate view is in the next couple of trading sessions, rupee is going to trade around 59 levels. Once it breaches that level, it is definitely going to go towards 60 levels, yes.
So also, how do you see banks reacting to this?
Well, banks work in tandem with the RBI. They do not have an individual capacity to manipulate this market. So banks is going to behave as per as RBI's recommendations. Yes, there might be some selling pressures on banks from the exporters, but then it is not going to impact the market too much.
All right. Thank you very much for joining DD News and sharing that perspective.